This presentation is for Chapter 4, Cost Management Systems, Activity-Based, Just-in-Time, and Quality Management Systems. In Learning Objective 1, we're going to assign direct cost and allocate indirect costs using predetermined overhead allocation rates with single and multiple allocation bases. So we talked about in previous chapters that some product costs are easily traced and assigned to the product, such as direct materials and direct labor costs. However, other costs, the indirect labor and indirect materials, will need to be accumulated in what we call cost pools, and then we will allocate those to the products using predetermined overhead allocation rates. So this slide just gives an example of some of the direct product costs for Smart Touch Learning for their tablet computers, and then some of their indirect costs. So batteries, processors, and screens would be direct materials, and the direct labor costs for the workers that are assembling the product would be also direct costs that we can easily trace and assign to the product. But there are other indirect materials and indirect labor and other costs like plant utilities and depreciation that aren't easily traced to the product. So we accumulate those in cost pools, and then we allocate those to the individual products using that predetermined overhead allocation rate. So how do companies assign and allocate their costs? Well, again, Smart Touch Learning has decided that they are going to expand their production by producing a premium tablet in addition to the standard model. So the management team has compiled the information for the direct materials and direct labor costs for each of the units, as well as the number of units that they expect to produce over the next year. They also have estimated that their total manufacturing overhead costs are going to be $100,000. So the challenge is going to be, how do they allocate that $100,000 to the 2,500 tablets that they expect to produce during the next year? So in previous chapters, we have learned how to allocate overhead using a predetermined overhead allocation rate. And so the traditional approach has always been to use one plant-wide allocation base. So in our examples previously, we used direct labor cost. That is the simplest method to use, and we would just apply it to all of the units that Smart Touch Learning would produce, regardless of whether it's a standard model or a premium model. So to use that single plant-wide rate, we now need to be able to estimate the allocation base. So if we're going to use direct labor costs, we would need to estimate for the standard and the premium models what we expect to spend indirect labor cost over the next period. So we take the per unit direct labor cost, multiply it by the number of units that we expect to produce, and that gives us our estimate. So for the standard model, we expect to have $176,000 of direct labor cost, and for the premium model, $74,000. So we add those together and we get a total of $250,000 of total direct labor costs that we expect over the next year. So using a single plant-wide rate, we would take our total estimated overhead costs of $100,000 and we would divide that by the total quantity of direct labor costs for the next year, $250,000. When we divide $100,000 by $250,000, we get 40% as our predetermined overhead allocation rate. Now we use the actual quantity of the allocation base to actually allocate that overhead. So if the standard tablet did have $176,000 in direct labor costs, we would multiply that by 40% and we would allocate $70,400 to the standard tablets. If the premium model had $74,000 in direct labor costs, we multiply that by 40% and we would get the total of $29,600 in manufacturing overhead costs allocated to the premium models. And you can see when we add those two amounts together, we get the total of $100,000 in manufacturing overhead. Now this slide shows the calculation of the total cost per unit. We take the total manufacturing overhead that we allocated to each of the models, divide it by the total number of units that we expect to produce, and that's how we get the manufacturing overhead cost per unit of $35.20 for the standard model and $59.20 for the premium model. We add that to the direct materials and direct labor costs per unit to get the total cost per unit for the standard and the premium model as shown on this slide. Now we're going to look at how we might use multiple department rates instead of a single plant-wide rate. Now we're going to say that we have two different departments that are involved in the manufacturing process for the tablet computers. We have a assembly department and we have a software department. For the assembly department, we have determined that machine hours should be the overhead allocation base. That is the one that is the primary cost driver for that department. For the software department, we are still going to use direct labor costs because we have determined that that is the primary cost driver for that department. We're going to use those two different allocation bases to apply the manufacturing overhead for the assembly department to both the standard and the premium model, and we're going to use direct labor costs to apply the manufacturing overhead for the software department, again to both the standard and the premium model. So the first thing we need to do is to determine what is the total estimated overhead cost for the assembly department. So if we estimate that to be $60,000, then the next thing we would need to do is to estimate what are the total machine hours that we expect to be used in that department, and we've estimated 20,000. So when we take the $60,000 of overhead cost and divide it by the 20,000 estimated machine hours, we get a predetermined overhead allocation rate for the assembly department of $3 per machine hour. Then we're going to use that overhead allocation rate and multiply it by the actual quantity of the allocation base used for each of the different models. So if the standard model required 13,000 machine hours, we multiply that by $3 and we get overhead for the standard tablet of $39,000. If it took 7,000 machine hours to manufacture the premium tablets, we multiply that by $3 and that gives us $21,000 of manufacturing overhead allocated to the premium model. And we can see that those two the totals added together equals that total estimated overhead cost for assembly of $60,000. Now we're going to do the same thing, but we're going to do it for the software department. So if we estimate that the total overhead cost for the software department is $20,000 and the estimated direct labor cost for the department is $31,250, then we divide 40,000 by $31,250 and we get a predetermined overhead allocation rate for software department of 128% of direct labor cost. Again, we're going to use the actual quantity of the allocation base. So if the standard tablets required $22,000 in direct labor cost, we multiply that by 128% to get the manufacturing overhead cost for the standard tablets of $28,160. If the premium tablets required $9,250 of direct labor costs, we multiply that by 128% and get the total overhead cost of $11,840, and when we add the totals together we see the total $40,000 that was allocated for the software department. Now we need to determine the total manufacturing overhead cost for each type of tablet computer. So we add together for the standard and the premium model the overhead allocation for the assembly department and the software department. We get a total then manufacturing overhead for each of the models and divide that by the number of units that we expect to produce. So we can see on this slide that now $33.58 of manufacturing overhead will be applied to each unit of the standard model. $65.68 of manufacturing overhead will be applied to each unit of the premium model. When we add the manufacturing overhead cost per unit to the direct labor cost and the direct materials cost, we can get the total cost per unit for the standard and the premium models as shown on this slide. So now let's look at the difference in the total cost per unit using the single plant-wide rate and the multiple department allocation rates that we used for assembly and software. So when we look at the total cost per unit for the standard and the premium models, we can see that the standard model cost went down by $1.62 per tablet, and the premium model went up by $6.48 per model. And even though these amounts may seem small, in today's competitive market, even a very slight difference in the cost of these products, which will translate into the price of the products, can have an impact. So we can see that using these multiple allocation rates can provide us with more accurate allocation of manufacturing overhead. And that is the conclusion of the presentation for Learning Objective 1.